Ever feel like you need a translator for all the financial jargon out there?
You're telling me, right, it's like a whole other language sometimes.
Exactly, and that's where SOS Finwell comes in. They're on a mission to make investing, especially in things like mutual funds, crystal clear for everyone.
Yeah, and they're not afraid to tackle the big players either. Like in this report, SBI Banking and Financial Services Fund, we're talking about SBI Mutual Fund here.
Oh yeah, I've heard of them.
They manage a huge chunk of money. I'm talking over 6.37 lakh core, so they're definitely not new to the game.
Okay, that's reassuring, right? But what about me, someone who's just starting to dip their toes into the investing world? That's who SOS Finwell is trying to help out with this report, right?
Absolutely. Think of this report as your own personal guide to understanding the specific fund. We're talking performance history, always important to see where a fund has been.
Right, past performance is key.
But they don't stop there. They dig into the nitty-gritty. What companies are in the fund's portfolio, how it stacks up against similar funds, even those pesky fees that can eat into your returns.
Transparency. Love it when companies lay it all out there.
That's what SOS Finwell is all about, giving you the full picture so you can make a smart decision.
Speaking of the big picture, let's zoom in on this SBI Banking and Financial Services Fund. What's the deal with it?
Well, the name kind of gives it away, doesn't it?
Yeah.
It's an equity fund laser focused on, you guessed it, Indian banking and financial services companies.
Okay, so we're talking banks, investment firms, that sort of thing.
Exactly. And here's why that's exciting. This sector is a major driving force behind the entire Indian economy. Lots of growth potential there.
Growth potential, those are two of my favorite words. But how has this fund actually performed? Like you said, past performance isn't everything, but it's definitely something.
You said it. And this fund's performance is definitely something to write home about. The report highlights a 5-year return of approximately 29%.
Wow, almost 30%. That's impressive.
It is. But, and this is a big but, we got to talk about risk. Because with potential rewards like that, there's always some level of risk involved.
Right. Risk. That word always makes me a little nervous.
It's smart to be cautious. But here's the thing, understanding risk is the key to managing it. And that's where all those numbers in the report come in. Standard deviation, Sharpe A ratio, beta, alpha. They sound intimidating, but really they're just tools to help you assess and manage risk.
Okay, I'm listening. Break it down for me. What do I need to know about those numbers?
All right, let's start with standard deviation. In this case, it's about 14.73 for this fund.
Okay, and what does that mean exactly?
Think of it like the higher the standard deviation, the more the fund's value might swing up or down over time. Kind of like a roller coaster, more thrills, but maybe not for the faint of heart.
Okay, so a high standard deviation means more potential for big gains, but also a bumpier ride. Got it. What about that Sharpe ratio I always hear about?
The Sharpe ratio is like a measure of risk-adjusted return. It helps you see how much return you're getting for each unit of risk you're taking. For the SBI Banking Financial Services Fund, it's about 0.73, which is decent. Generally, the higher the Sharpe ratio, the better.
More bang for your buck, risk-wise. Now, what about this beta thing? It seems to come up a lot in investing conversations.
Beta is all about how closely a fund's performance tracks the overall market. A beta of 1 means it moves in lockstep with the market. Anything higher means it tends to be more volatile. And anything lower suggests it's a bit more stable. The SBI Banking and Financial Services Fund has a beta of 0.85.
Interesting. So even though it's invested in a sector known for growth, it's actually a bit less volatile than the overall market.
Exactly. It might offer a slightly smoother ride than, say, a broader market fund.
Okay, that makes me feel a bit better.
Right, so we've covered standard deviation, Sharpe ratio, and beta. The last piece of the risk puzzle is alpha.
Alpha, hit me with it.
Simply put, alpha measures the extra return that a fund manager is bringing to the table above and beyond the market's overall performance. Think of it as their skill level.
Oh, like their special sauce. So a positive alpha is a good thing. It means they're doing something right.
You got it. And in this case, the fund boasts an alpha of 2.21, which suggests the fund manager is adding some serious value.
Okay, now that's impressive. And speaking of the fund manager, let's talk about the person calling the shots for the SBI Banking and Financial Services Fund. Who is this investing guru?
The maestro behind this fund is Mr. Rajat Chandak, and let me tell you, he's not new to this rodeo. We're talking 15-plus years of experience in the world of finance.
15 years. Wow. This guy has probably seen it all at this point.
You could say that. And that kind of experience can make a world of difference when it comes to navigating the complexities of the market.
15 years is a good run.
Yeah.
I'm guessing Mr. Chandak has seen it all at this point.
Yeah.
But even with the seasoned captain at the helm, there are always fees to consider, right?
Right, you are. Even the best captain needs a crew, and that costs money. The report is upfront about the expense ratio for this fund, which sits at about 2.1%.
2.1%. That seems a bit high, doesn't it?
It's definitely higher than what you'd see with, say, a simple index fund. But remember, this is a sector-specific fund, and that means more specialized expertise, deeper research, more hands-on management to try and deliver those impressive returns.
Okay, so it's like paying for premium service, like you're saying. Higher fees, but hopefully higher returns to make up for it.
Exactly. You're paying for the expertise of a seasoned professional like Mr. Chanbak and his team. They're doing the heavy lifting, the research, the analysis, trying to pick those winning stocks.
Makes sense. So speaking of what they're picking, let's take a look under the hood. What companies are in this fund's portfolio? What are they actually investing in?
Well, get ready for some familiar names because this fund is all about the big players in Indian banking. We're talking HDFC Bank, ICICI Bank, Axis Bank, all the heavy hitters.
Wow. It's like a who's who of Indian finance.
That's one way to put it. And that's strategic. By building a portfolio around these well-established companies, the fund aims to manage risk.
Right, spreading those bets around. So diversification is a key part of their strategy.
Absolutely. It's about balancing that growth potential with a healthy dose of risk management.
Makes sense. Now let's shift gears for a second and talk about the practicalities. Let's say I decide to invest in this fund. What happens when I'm ready to cash out?
Yeah.
What do I need to know about exit loads, lock-in periods, that sort of thing?
Great question. SOS Finwell is very transparent about all of that. They point out that there's a 1% exit load if you sell your units within a year of investing.
Ah, so they want to encourage a long-term outlook. You can't just jump in and out quickly without some penalty.
Exactly. They want you to be a part of that long-term growth story. But after that initial year, there's no lock-in period. You're free to redeem your units whenever you need to.
Okay, that's good to know. Flexibility is always a plus. Now let's talk taxes. Because as much as we love to make money, nobody wants a nasty surprise come tax season. How are the earnings from this fund taxed?
Well, the good news is that this fund is treated just like any other equity fund when it comes to taxes. So any gains you make after holding your investment for more than a year are taxed at that flat 10% rate above 1 lakh.
Okay, that doesn't sound too bad.
Not at all, especially if you're looking at those long-term gains.
Right. Long-term is the name of the game. Now, there was one more number in the report that really jumped out at me, the fund's AUM, or assets under management. They're managing a whopping 3,610 crores.
That's a hefty chunk of change, but it's also a testament to the level of confidence investors have in this fund. They've clearly attracted a lot of attention.
That's true. But are there ever any downsides to a fund managing that much money? Could it become, too big for its own good?
That's a really interesting question, and it's something to consider. A massive fund like this might not be able to move as quickly as a smaller fund to take advantage of new opportunities or adjust to changing market conditions.
Right, kind of like trying to steer a giant ship versus a speedboat.
Exactly. So there are always trade-offs to consider.
So it's not just about size. It's about finding the right balance
Yeah.
for what you're looking for. But I mean, that's kind of what this whole report is about, right? Helping investors figure out if this fund is the right fit for them.
Exactly. And SOS Finwell makes it clear this particular fund. It's geared towards investors who are comfortable with a little bit of risk, folks who aren't going to panic if the market takes a dip.
So not for the faint of heart.
You got it. This is for investors who are looking at the long game. Think 3, 5, even 10 years down the line.
Okay, so patience is key here.
Absolutely. They're buying into that long-term growth story of the Indian banking and financial services sector, bumps in the road and all.
Got it. It's about seeing the bigger picture. But they did mention some other funds too, right? Just to give a sense of what else is out there.
Right. They briefly touched on a couple of others, the ICICI Prudential Banking and Financial Services Fund and the Nippon India Banking Fund.
So it's always good to do your homework. Compare, contrast, see what else is out there.
100%. Don't put all your eggs in one basket, right? Even if that basket looks pretty good.
Solid advice. So as we wrap up our deep dive into the world of Indian banking and financial services, any final takeaways from this SOS Finwell report?
Well, they definitely make a strong case for the SBI Banking and Financial Services Fund, especially for the right investor. But their biggest piece of advice, and I think it's great advice for any investor, is to really do your research. Read those documents, Understand what you're investing in, and don't be afraid to ask questions if something's unclear.
Yes, knowledge is power, as they say.
Hmm.
But sometimes a little expert guidance is helpful too, right?
For sure. If you're ever unsure about something, talking to a financial advisor can be a game changer.
Couldn't agree more. Well, there you have it, folks. Another deep dive successfully navigated. We've unpacked the SBI Banking and Financial Services Fund, explored the ins and outs of investing in this exciting sector, and hopefully armed you with the knowledge you need to make smart decisions about your financial future.
And if you're looking for a reliable guide on your investment journey, SOS FinWell seems like a great place to start.
I'm with you on that one. Check them out online, see what they're all about. Until next time, happy investing.